Hello everyone, welcome to the channel of Tradeometry. Today is April 20th, Monday. So market just closed a few minutes ago. My account is up over 3% in my traditional IRA account. Most of my stocks are very green today, and all my options are doing really well. My Coinbase, IGV, and Oracle. And I bought some Oracle calls today, and I've also added the Coinbase calls today, and I'm still holding my IGV calls over here. My Roth IRA is also doing quite well today. My Roth IRA doing even better today, over 8% today, up $91,000. The main contributors were ServiceNow, Oracle, IGV, and Coinbase. So I bought a lot of Coinbase calls because I've noticed the crypto run lately. So I think the crypto and software are continue to run, and basically it's going to be a catch-up play to QQQ and Asemi. Because I believe they are being extremely oversold in the past few months, and we're gonna have everything rally towards the midterm, I believe, as a general risk on play. Let's take a look at the market today. I want to do some technical analysis today with IGV. IGV, we found the bottom at April 10th. We see this reversal, and then you start to see these moving averages start to flip. What do I mean by flipped? When the longer term EMA is above the shorter term EMA like this, it means a bearish pattern. Everything's going down, and the yellow line is the 200 period EMA. The green line is the 100-day moving EMA. And the orange line is the 50 period moving average, and the red one is the 20 period moving average. So when you see this bottom here and it moves up, and then the order of the EMA start to flip, the 20 period, the 50 period, 100 period, and the 200 period. So this is bullish. When you see a signal, a flip like this, it usually means it's flipping. It's looking at a bottom right here. And you can adjust your time horizon. I sometimes use 5 minutes, sometimes I use 30 minutes, depending on what time frame you're looking at. And also you start to see the volume right here. The volume here starts to pick up. If you look at the daily chart, it's more clear. The daily volume is clearly very, very high over this period. And then over here, you see a lot of volume. So this is clearly a pattern of bottoming, because there are people coming in. Sometimes people see the big volume with red candles, a red volume. They think it's a lot of people selling, which is true. But for each buyer, there's a seller. For each seller, there's a buyer, right? So when you think all of these people selling, what about thinking about who are the people buying here, right? Who are the people buying here? These people bought here, here, and here. Who are the people bought here? I think these are the smart money buying here, because after you see the volume spike, the trend start to reverse. Someone bought the dip here, clearly, right? I think it's the smart money buying the dip over here. Now let's take a look at the 30 minutes chart. Very, very bullish. As you can see, it has a lot of unfilled gaps. Has like 1, 2, 3, 4, 5 unfilled gaps on the 30-minute chart. It's only touching 20 period EMA, which is very, very strong. It barely breaking below the 20 period moving average at the start of today, but very quickly reclaimed it and then never fell below again. So slowly grind up. It's very, very strong bullish pattern. And then if you look at the 5-minute, it's also very clear. So from the 5-minute, you see it start to flip. The support is at the 100 period moving average. Each time it hit the 100 period moving average, it bounced. It find the support right here and right here and here. So every time it tried to fall below and someone is coming in to buy the dip. As long as the price movement stays above these moving averages, the uptrend's very much intact. There's no need to worry about it. Just let it ride. Just let it ride the moving average all the way until it couldn't ride it anymore. So that's how I play it. And then a few other stocks like ServiceNow right here. Even though this one, it broke below this moving average, but very quickly reclaimed it the next day with a gapping up and squeeze up much higher. So this dump immediately invalidated because of this breakout of the previous day's high, and then we keep going higher. Then the 100 period moving average becomes the support. Goes up and down and up and down. It will follow along these moving averages and keep pushing up. Now look at Oracle, right? Oracle, very similar story. It goes up and it was barely touching 100-day. It was touching 50-day, and then follow the 50-day and goes up, and then on Friday it had a slightly larger pullback to retest the 200 period moving average, and it held again. This is also the gap position and the 200 period moving average on the 5-minute chart. So the bullish pattern holds. So for me, I like to use these 20, 50, 100, 200. So this is my go-to indicator for identifying patterns and the support levels and resistance levels. One thing I love about moving averages is because they can give you multiple price levels to watch. Sometimes it will just bounce off the 100-day period EMA. Sometimes it bounces off the 200 period EMA. But each stock has its own characteristics, their own personalities. So sometimes stocks move a little faster in the beginning, and then they start to take a bigger break, and then they keep going up. And some stocks, they like to consistently taking a little break and then move up and then take a break again. So each stock's moving differently, which is very normal. You don't expect every stock to move exactly the same way, which is not going to happen. But you just have to understand each individual stock, its own characteristics, the sector, the fundamentals, the technicals. You have to know all of them. So when you buy the stock, you know what you're buying, you know what you're holding, you know what your price target, you know where the support is, you know where the resistance is. That's how I approach my trading, that I would identify clear price target, my stop loss. I will follow the price action to identify if the trend has changed or not, if there's any fundamental changes. So when things happen, I know immediately what to do next. So I'm always prepared. This way, you never get left holding the bag or just get washed out without coming back in. I think my approach has been working very well in the past few years. I'm keeping using my methodology and taking advantage of the price movement. And Coinbase doing really well today, up 2.5%. Very similar story. You see Coinbase also start to flip around previous week. You see this moving average start to flip, and then it started to move up, and then it touched the 50 period moving average. Here it touched 100-day period moving average, and then today it touched 200 period moving average, and it bounced once, twice, and bounced. Notice how amazing it is, right? 200-day period moving average, first bounce, second bounce, and reclaimed the 100-day period moving average, breakout, and retest again. 100-day moving average held and continue to move up. This is like a textbook uptrend, you want to say, because if you look at each level, like it has a clear support at each level, and like price level you can watch at 200 EMA, and then breakout, retest, like very classic breakout pattern, keep moving up. Very, very nice. I'm still keeping all my positions at this moment, especially it's doing so well, and IGV leading the way of all the other indices. The semi is actually slightly red today. The QQQ is also red, and S&P is also red, but the software is green, and crypto is green, and my Coinbase is green. So everything I hold is pretty much green, which is good. This is what I call the catch-up play. The stocks previously got sold aggressively, now is trying to catch up, and the stocks that were previously overbought now is taking a break, which is very normal. And like I said, each stock has its own personalities and characteristics. Like the semis, they ran so hard previously, now they just need to take a break, and then now it's the software's turn to take the lead. I like everything so far, and despite all the chaos in the Middle East, market barely pulled back, and the small caps are very green today, over 0.5%, which is also very nice, meaning the risk on sentiment is still there. And I just happened to pick the best sector today, which is software. I'm going to keep ride my software plays until it stops going up. So let me know in the comment section below, what do you think of the software stocks? Are they oversold? Are they overbought? What about the semiconductor stocks? What are the stocks you're holding? If you're interested in my Discord channel, please check the link in the description below, where I share live market analysis and trade alerts. And that's all for today, and I'll see you next time. Bye.
Another Monday, green on the screen, feeling so serene. Leverage the assets, living the dream, a money machine. Blue chip vision, make the right decision with perfect precision. Yo, we own the street, can't accept defeat. This bull run is sweet.